What's up, traders? Let's do our Sunday evening homework and look at the strategy and support and resistance levels for the week ahead. First, I'm looking at Bitcoin because I made a post about this spike that it set up on the 1 hour time frame just a few hours ago. And what I was looking for was for price to come up and potentially break that spike to go a little bit higher. Now, in the broader picture, what I've been seeing with cryptocurrency is it came up to a resistance level and has done a pullback from that. Now, the real key, the real MVP of the cryptocurrency sector right now, as I see it, is Ethereum. And the reason for that is from this down move starting in November down to January the 25th, it set up a 50% retracement at 3,500. And that is where Ethereum hit on April 3rd and has since reversed off. What this is actually showing me, and I'm going on record and saying it this week, is that the cryptocurrency market is beginning to follow the pace of Ethereum rather than Bitcoin. Now, Bitcoin can be represented by the BTC.D symbol. This is what I've referred to in a lot of my weekly videos to look at what is the Bitcoin dominance. And for the better part of January through March, Bitcoin dominance, in other words, the market cap percentage that is dominated by Bitcoin, was rising, but now it has actually since fallen. So I've added a new symbol to my watch list, and that's ETH.D. And what you can see here is that Ethereum dominance has now gotten to 20% of the total market cap of all of cryptocurrency. So basically, 41%, let's call it 42 plus 20%, a little over 60% of the entire cryptocurrency market cap, all the dollars, all the wealth that's in cryptocurrency is dominated by Bitcoin and Ethereum. But Ethereum is actually making a run for the rise there. So I'm going to be interested to watch that. Now, that can happen independent of price. And one thing I do like to check back on is the Ethereum Bitcoin ETH cross. This is something that I've been watching this week. I already have this annotated for my live stream on Friday. I'll go through it again. Basically, you had a trend on this cross pair from October until December. Now, this is, of course, Ethereum relative to Bitcoin, how much Ethereum you can buy with Bitcoin. And then we had a retracement down from here. And you notice how it kind of got itself into this little region right here and has bounced off. I'm watching for a break above there to tell me that Ethereum is going to achieve even more dominance. So I'm watching this pair to break out of this little range it's in right now. And that's going to be related to the Bitcoin and Ethereum market cap dominance. So be watching for something along those lines. But as it stands now, broadly speaking, it looks like this rally is really starting to slow down. This rally that I've been talking about for a few weeks now, if you recall, it all began from this March the 15th volatility spike, which triggered the leg up. Of course, Ethereum was a lot more clean, a nice clean up and to the right. But then there's one of those spikes that I like that happened on April the 3rd. Of course, I've also been trading Solana. It had a little spike at resistance here on April the 2nd, and that's basically where these topped out. Now, I'm, of course, watching this recent trend for its 50% retracement level, and Solana's is right there right now at 110. So if you're trying to play this 50% pullback, I wouldn't be mad at you, but you need to make sure that you have your stops in place because broadly speaking, I could just go right back into chop. Here's something interesting. This is one of my favorite cryptocurrencies because it is a privacy coin, which I believe is the one of the fundamental characteristics that all cryptocurrency should be. Monero. Monero has been a little sleepy guy, a little sleepy cryptocurrency. Hasn't done very much in the way of performance since 2021. But in this recent rally, which all crypto experienced, rather than do a pullback, like of course Bitcoin and Ethereum have started to do, as well as Solana, Monero, on the other hand, has actually started to break out. That's interesting. That is very interesting. So I want to be watching this on the bullish side, as a matter of fact. So that is the major cryptocurrency I'm looking at. Of course, I've got to talk about Dogecoin, and I did make a post about that today because someone on my Discord was mentioning it. They have a very ambitious target of $3. I wish them the best, but from a technical standpoint, I think it bears in mind that since the 2021 rally, it has been making lower and lower highs, including this recent rally. Now, apparently, this bar here on the daily yesterday was based on a tweet from Elon, as all Dogecoin tweets may be. So, where does that put us? Well, we had this recent run up, and that puts the 50% retracement at around 14.48. So, let's call it 14 cents is the support that it needs to hold. And of course, we need it to get back above 18 to really get some good momentum going, get that pump that everyone that owns Dogecoin wants. Well, right now, from the downside move, it needs to conquer 16. So look for it to get to 16, then to 18, and then following that, you can maybe get your rally, but do not backhold this. Please do not backhold this if it gets back into this region right here, because it's very likely just going to make another low. Sorry. All right, so let's look at some other stuff. So, stock market represented by the S&P 500 index futures, the ES. Well, from the down move, January the 4th down to February the 24th, the big pivots on the stock market, the 50% retracement level that I've been talking about for a long time was 44.54. Price got up to it here. It held it on March the 21st, went above it, came back to test it, held it on March the 23rd, made a little rally for those that were trying to FOMO into the stock market, those that thought that when the world was going to end back here, World War III was going to happen. Remember that? Remember that? Do you remember all that FUD? Well, once again, boom, boom, all last week, held above this level. It is key. 44.54 on the S&P 500 futures. Holding here to go up, and if it does that, you can bet it's going to retest the high. But if it breaks it, well, I'll be the first person to come on here and tell you, look, looks like we're going to have some more volatility. NASDAQ, it had a 50% retracement level. The correction, I got to clean up all my day trading levels, sorry. Correction 50% was, let's call it 14,800. It briefly respected it, but now it has broken below it. So NASDAQ is showing us some signs of breaking its support and headed back into chop territory. So expect some more volatility from the NASDAQ. Let's look at the VIX. What does the VIX tell us? Well, the thing about the VIX is it's very good for picking market bottoms. It really is. And as I've been talking about for weeks, we have the lower highs on the VIX, which really told us that this recent stock market correction was ending, or rather, it was not going to continue into the crash that much of the media was telling you it was. Those lower highs on volatility told us that the market was not pricing in more fear. Well, as the price of the stock market has gone up, so has the VIX gone down. And it briefly got into what I would consider normal VIX range, basically the teens. Basically got into the 19s and close down to the 18s last week and the week before. Had a little move up, but it's not really coming to any kind of resistance. Honestly, it is entirely possible that the VIX could come up to If we have a down move in the stock market, I would be looking for retracement levels on the VIX. It could either be the retracement of this move down from the last high, or possibly a retracement of the broader move here. They're both around 27, close to a little above a 27. If we did get something like this, assuming that there's not some more countries being invaded or something like that, I would actually look for that to be another opportunity to start loading up on stocks. That would actually be a pretty good signal. We may or may not get that. We'll just have to wait and see. But I am still operating under the premise that the best trades, the best opportunities of this year happen in early March and or on the Russian invasion of Ukraine, because that is when fear was and probably will be the highest in 2022. We'll have to see, quote unquote, anything can happen. Oil. Oil is something, let me clean this up. Oil is something that I know a lot of people have been watching, anybody that fills up their car, but oil has actually been a very easy to read and chart symbol. Let me show you why. So back in December, this is when I loaded up on ExxonMobil. We had the move which took us back to 100. Nice, easy psychological level, and it even spiked out right there. Now I was in an oil trade long, and I got out at 100. And well, how many of you guys take profit too early? You know what I'm talking about. But that sets up the broader picture all the way up to the crazy move up to 130. And you see there how clean the pullback has been to the 96, 97 level. In fact, the pullback from the top side was even the 50% around 112 of the down move. So the movement of oil has been very easy to chart. And now, once again, it is at support. My gut, my instinct tells me that we're going to probably range back up to that 112 after holding this support, because you can see that once again price is respecting this support that it established. Even though the spike didn't work, still tells you that there's some resistance there. So 96 is really where oil is wanting to hold, and one or two things are going to happen. You're either going to get a rise off this level, or you can get a breakout to the downside. So be watching for oil. There should be a pretty interesting setup either direction there in the next couple of days. Gold, still not following through on this breakout from March. Sorry to the gold bugs and the silver bugs, but you did not make a new all-time high. And now gold is getting very boring again. Silver, which was a breakout that I took because I liked the risk reward better on the breakout of silver. When it broke this level right here, well, it pulled back and has breached this support, the resistance now. It was a support. It has breached the resistance of 25 and it's holding below there. So again, this breakout is a failure. I wanted to see it come up to test the 29, but that is just not happening. Now it's holding the resistance of 25 to the downside and could probably trend lower. That's what I'm looking at in silver. So I'm bearish on silver and gold. Sorry to the silver and gold bugs. So my two highest conviction trades of the year are Google and Amazon. Now, Google has pulled back to a 50% retracement, 2,700, let's call it, from this rally off of March the 14th. Closed below it on Friday. We'll have to see what happens as this week goes about. But really, the key level here is 2,700. But this is a company I like. I'm going to hold on to it. I like my position on it. Amazon, it gave another opportunity to get in post split at 28.33, which I posted about, and the rally from there continued and it is now pulled back. The opportunity perhaps to get into Amazon for the split could happen at 30.45. So perhaps a little bit more NASDAQ bearishness, perhaps a little bit more tech stock bearishness will get us back down to that level. Look for a setup. I've already got my position. Earnings are coming up on the 28th. And I believe, if I recall correctly, that the split is happening in May. So we'll see what happens between now and then. One thing that I want to notice on my list right here, Costco. Wow. Costco has been a really good winner for the last few years. With all the concern about inflation, my thesis on Costco was pretty straightforward. If people are worried about inflation, if people worry about food prices and toilet paper prices going up, they're going to try to buy it in bulk. And that really informed my decision about Costco. I think it's a little late to the party now, but that has played out pretty nicely there. Tesla. Tesla, of course, recaptured the all important level with much volatility of 900. And now it is ranging here. Let's clean that up a little bit. Let's just clean this out. So again, if you are looking to jump into Tesla, I would use the same kind of methods. Look for a 50% retracement. It's about 955 there. But man, this is a volatile. It's a meme stock. Tesla is a meme stock. And so you could get very much hurt on this. We'll see what happens. I'll be looking for a setup if it pulls back to 955. We'll see. And one more thing to note, the Palantir trade from back here is working out pretty well, still going pretty strong. Bonds represented by TLT. I've got to annotate up. This was actually a loss. This was one I talked about in the live stream that we took on April 1st, April Fool's Day, and it stopped out. I had a little debate on a Discord this week about people that were dollar cost averaging into TLT. Okay, I dollar cost averaging is something that has definitely worked for the stocks for many, many, many years. That's just not my style. I would rather be out of this trade as it continues going down further and further and have capital to put into something else. That is just my personal preference for investing and trading. Because really and truly, I believe that if TLT was going to hold a bullish trend, it should have stopped all the way back in February. Instead, bonds just keep going lower. And that makes sense. That makes sense because if interest rates are going to keep rising, the value of bonds are going to go down. And so I think the market is pricing that in. So the bearish trend in bonds is continuing. And that's what the chart tells me. So that's what I'm looking at this week. I'm going to be very cautious in cryptocurrency, a little bullish on Monero. Stock market going to be watching that support level on the ES for sure. And we might get a few more opportunities to get into those pre-split rallies on Amazon and Google. And that's what I'm going to be looking for. So as always, trade wisely. We'll see you in the next video.